stock of the day is Northern Star Resources. In fact, we have an update from a couple of different miners today. We had South 32 yesterday. We're going to get into that as one of your picks in just a moment. It has confirmed its group guidance for the financial year is up to scratch, will meet production and cost expectations, raking in some 937 million in sales for the March quarter. However, drilling into the update, its Pogo operation in Alaska will be affected by higher costs and lower production. Investors heeding the warning. Shares taking another hit today. They were also down yesterday. It's actually come back just a little bit, still off close to 3% at this point. Chris, more broadly, we're hearing this from miners at the moment, just those rising costs, particularly with sourcing labour at the same time. What are your thoughts on Northern Star, maybe more broadly with the gold miners?
Yeah, you nailed it, Andrew. The all-in sustaining cost going up from at the top end, $1,575 per ounce to $1,640, I think, is what the market is not liking today. Hence the reason why the share price is down more than 3%. As you say, that's going to be common across a couple of the stocks that we look at today, and fairly common across the miners as they put out their production reports. Just putting all that to one side, I do quite like Northern Star as a company. I had the very good fortune to sit next to a Northern Star employee at a mining conference not so long ago, and he was talking to me about nothing that the market can't know about, but about the fact that they have always gone after really high quality assets with extended mine lives. That's sort of been their mandate, and they do indeed have a suite of high quality assets that do have that they all do have quite a long mine life. So their production profile I really quite like. They're operationally excellent. They can't control the externalities in terms of the costs. That's being visited on every miner. So I do quite like Northern Star, but I don't like gold at the moment. I would say that the macroeconomic conditions for gold in the last 12 months have been fantastic. Flight to safety, flight to fight inflation. Gold is typically an inflation hedge. It couldn't have been any better for gold, and yet gold has gone up around 10 or 15% over the last 12 months, whereas some other commodities like lithium, for example, are north of 200. So just in terms of that commodities complex, gold would probably be the last thing that I would want to be looking at. There's a whole lot of other commodities where I'd rather be playing. But in spite of all that, I do quite like Northern Star as a business, but I can't buy it.
Would you hold it?
No. There's other things I'd rather hold.
Okay, fair enough. Spend your cash elsewhere. Michael?
Yep.
An update today. It's never good when you've got falling production expectations and also increasing prices, and that's being reflected in today's move. The Australian part of the business still makes up 85% of Northern Star's sort of production and revenue outlook, and that's unchanged at the moment, according to management. But the problem is, what is the expectation going forward? And it's unlikely that any of those cost pressures will abate anytime soon. It's very hard to get a read on what's going on with the gold price at the moment. The gold price itself, looking over the last 12, 18 months, has been fairly consistent around these levels. A lot of the gold producers are back 30, 40% from their highs from about 6, 12 months ago. So the gold producers are in some way leading market expectations on what's going on in the future with the gold price, and the market's a little bit concerned there. Our preference when we do look at gold producers is Northern Star. We do think it's a very good business. They've managed to acquire some good assets in recent years and expand that mine life. Evolution Mining's another one we've liked a lot in the past. And then if you look at something a bit more up the risk curve, something like a Silver Lake. But in general at the moment, we think that gold will come under a bit of pressure potentially, particularly if interest rates and bond yields continue to have that upward trajectory higher. So we just think it's a tough environment because on one hand, yes, inflation is expected to be beneficial for the gold price, but on the other hand, offsetting that rising bond yields is probably a net negative for them. So from our standpoint, we're not overly keen on gold at the moment. I mean, some of our clients do hold a little bit in their portfolios, and that would be through Northern Star, Evolution and SLR. So, but at the moment, we wouldn't have a buy. We wouldn't really have a hold either, but if some clients like to hold it, I'll give Northern Star a little hold. As part of a diversified portfolio, not with the expectation that's going to necessarily jump up in the next 3 to 6 months.